it's banks which I think are making all the difference. So let me get in Latha, who is here, and I think we'll have a couple of reactions as well. Latha, this is good news, long awaited.
Oh, absolutely. I mean, which bank would like to raise money at 5 and 6% and keep it idle?
Yeah.
It was a huge punishment. CRR is, I mean, one of the ugliest words in the banker's lexicon because it's a punishment ratio. And hence, you know, SLR is earning you some money. You're putting your money in government bonds. CRR is keeping it idle, and that came out of the blue. The 2,000 rupee notes, like I've been saying, were called back on May 19th. Nothing was announced by the Reserve Bank. Everyone knew that many amount, 3 lakh crore or something, will come back. But they didn't do anything in May, they didn't do anything in June, they didn't do anything in July. August 10th, out of the blue, for all the money that's come back, all the deposits that you have got, you know, you have to keep 10%, was a bolt from the blue. And there were, like my poll indicated, the market was not sitting on entire hopes that it will entirely be called off. There were a good 30% which said it will be retained 10%. 50% said it will be brought down to 5%. Now, you know, it's been brought down, yes, only by 7.5%. But within a week, it's going to 5%. And within a month, it is going to be 0. That was not in the books of anyone except all but 20% of the people who said that it will be reduced to 0. I mean, right now, they will change the instrument. And if there is a liquidity gush, they will absorb it through other instruments. That was all of 20% of the people who called. I'm not counting myself. I voted with them. But obviously, I was not one of the bank bond respondents. But it's, I think, extremely positive. From a banking sector point of view, bond dealers will be happy. But liquidity will be squeezed out by the Reserve Bank.
We actually have Lakshmi Iyer, who's joined in. We'll get some more experts as well. So let's get some reactions in as well. Lakshmi, hi, good afternoon. Phased exit of this ICRR. Your first thoughts? Lakshmi, can you hear us?
Well, I think we will redial Lakshmi and maybe go to Mr. Ashutosh Khajuria of Federal Bank. Mr. Khajuria, how does it feel? Is it a relief? Your reaction?
Yeah, I think for any banker it would be a relief because it was a cost item. Of course, because of the deposit of 2,000 denomination currency notes in the form of deposits rather than merely for exchange had definitely, increased liquidity in the system. And on the other hand, it's a fact that during festive season, starting from Ganesh Chaturthi and going on till Christmas or so, there would be a need of, more liquidity in the system because part of it would get leaked through increase in circulation of currency notes. So despite all that digital, transactions, I mean, your UPI transactions crossing 10 billion in the month of August, it's still there would be a need for currency notes. So I think
absolutely.
Nobody was expecting it to be withdrawn one shot on 8th of September, effective 9th September. So it has come there is a glide path. And by 7th October, if it is,
restored completely.
Status quo ante, and I think it's a good news for them.
Very quickly, Mr. Khajuria, do you expect now bank deposits to get a little saner? We saw some competition from the banks borrowing at 7 and 8%. Attracting deposits at 7 and 8%.
As long as it's a competition amongst the banks and that is pushing the rates up, ultimately it is not impacting the liquidity. The thing is whether the deposits are getting created out of the second phase of credit growth. So you have credit growth which gets followed by deposit growth because credit itself creates deposits.
Of course.
Whether they remain in banking system or they go to mutual fund industry or insurance or other competitors in financial sector is, something which bankers are, more, I would say concerned about or preparing themselves for. So
absolutely. I agree with you. For them, the more important part is whether it goes to mutual funds or insurance, at least it remains within the banking system. It's going from one account to another. ICRR was taking it away from the banking system. Point taken.
Yes.
Lakshmi Iyer, I think, is back. Yeah, absolutely. Impounded. I agree. And not earning you any money. Lakshmi Iyer is back with us. Lakshmi, reactions, especially as a bond dealer?
So, Latha, on your poll also I mentioned that a calibrated withdrawal seems to be the need of the hour, and I think that's exactly what they have done. And it's good because from the time this was announced, that incremental system liquidity has actually receded. And if they would have continued, then it would have meant a much tighter, third or fourth week of September in terms of liquidity, which probably may not have gone too well. So I think this is pretty much in line with expectations. No major reactions in the market yet, but yeah, I think it's a step, in the right direction. More for the short end of the yield curve, which will kind of, cool off a little bit, but nothing very substantive, given that we have the advanced tax outflows as well.
Okay. Is there some minor benefit for NBFCs who may be borrowing maybe at the shorter term, or it doesn't even go up to the 1 year in terms of impact?
May not really go too much up to that level as such. So I would say it is broadly neutral to status quo. Small psychological impact at the very near end.
Okay. And would you expect that there will be more VRRs announced? I mean, the current variable rate reverse repo for 14 days again looks like almost a bomb. Only 18,700 crore has been attracted when the asking amount was 50,000 crore. So you expect more VRRs to be announced, shorter term ones?
Yeah, I think, as I said, once we have the advanced tax out of the way, once that system, assessment happens, what kind of spending is happening in the system, I think that, quantum can be calibrated. But I think looks like that could be the part of the course.
Okay. Thank you very much, Lakshmi, for joining us with your quick take. Do we still have Mr. Khajuria with us? Mr. Khajuria, what could be the impact on a bank's margin? Since this has been for about 2 months of this quarter, does it shave off about 3-4 basis points from your margin this quarter?
Yeah, about 2.5 basis points for our bank. Probably same would be more or less for the entire banking system, 2 to 3 basis points.
Yes. Yeah, I would expect a little more for HDFC Bank since, unfortunately, the merger happened at that time. They had a
merger has happened, so their NDTL has increased sharply.
Yeah. Okay. All right. We leave it at that, Mr. Khajuria. Thank you very much indeed for joining us. So we are going to see a little bit of impact on bank margins, but I think that's what would have already been there in the price. What's all of 2 to 3 basis points?
So if you look at the Bank Nifty, we saw the sharp spike. It's while we were having the conversation, I think the Bank Nifty has climbed down some 200 points. You can see that. There's
I didn't do that.
No, you didn't do that. I didn't imply that. If you could do that, you could pull it back up by 200 points. So we can, I urge you to do that. But anyway, we're at 45, just under 45, 200 at this point in time. How